Welcome everybody to Effortless Real Estate Investing, presented by us here at Trius Lending Partners. We're excited to have you today. First day of spring, first day of March Madness. I don't know where everybody is in the country. We have a great crowd today, but here in Baltimore, it's sunny and about 61 degrees outside. So it's beautiful for the first day of spring. All right, let's jump in. So my name is Stephen Sless. I'm going to be presenting with you today. I am the COO here at Trius Lending Partners, and with me today is the one and only Jessica Franta. Jessica is our head of investor relations. So if you invest with Trius Lending Partners, Jessica, her main function is to make sure that you're happy, that you're well served, and later on in the presentation, she'll explain more about her and her role and what exactly investor relations entails here at Trius Lending Partners. We're going to keep this pretty short and sweet today. We're going to spend probably about 20 minutes presenting some information, and then we'll open it up to some question and answer session at the end. So if you have questions, you do have a question box. There's a chat box and a question box. So let's try to keep the chat to the chat, and then the questions to the questions. So if you have anything specifically burning on your mind as far as a question goes, drop it in the Q&A box. We're going to get to those at the end of the presentation, but we're also going to keep eyes on the question and answer box during the course of the presentation. We'll have eyes on the chat box as well. And if there's a question that directly ties into something, then we can quickly answer it. We'll go ahead and do so. Otherwise, we'll address all questions at the end of today's presentation. Okay, so let's talk about a little about why everybody's here today. What is the opportunity? Why are we hosting this webinar? Well, it's really quite simple. So the opportunity that we present at Trius Lending Partners is to invest passively in real estate, investing in the real estate loans that we make to developers that are doing fix and flip projects. They're really funding they're doing any project from a Baltimore City row home all the way up to a $5 or $6 million commercial project. We're funding projects such as condo conversions, strip malls and shopping centers, restaurants, hotel projects, warehouse projects, really anything that is non-owner occupied. So if the person who is borrowing the money from us does not live in that property, we will entertain making a loan on it, and we lend anywhere on the East Coast. Okay. Now we've all heard about the markets lately. If you have a 401k or a stock portfolio, you're probably feeling a little uneasy right now, as am I, right? We all have money in the markets, and we've seen that market ebb and flow. We've seen the constant fluctuations in the market, particularly in the past, I don't know, few months. So what we offer at Trius is a means to diversify your portfolio with an alternative investment into real estate. We'll touch more on that as we go. We offer a safe and conservative method to invest in real estate effortlessly, hence the name of today's webinar. And it's a great hedge against the market fluctuation. So for 22 years, Trius Lending Partners has been accepting capital from private investors. And for 22 years, not a single investor has lost a nickel investing in Trius Lending Partners. And we'll explain how that comes to be later on in today's presentation. But we provide safe, secure, reliable returns to investors backed by the real estate loans that we make. And so the opportunity that we are presenting today is to get in on that, to be a part of our investor community. And we'll explain how to do that later on in today's presentation. All right, so let's talk a little bit about Trius Lending Partners as a company. So the company was founded in 2003 by our founding partner, Steve Bond. We are a private lender. What does that mean? It means that we accept no institutional capital. We make every single decision on the loans that we make here in-house. We lend on the East Coast. We also service every loan in our portfolio, and we manage about $120 million in assets under management. This is money from private investors that have invested with us. We use that money to deploy to the real estate developers that are doing the projects. And Trius Lending Partners has grown leaps and bounds over the past 2 decades, particularly over the past few years. And we provided you with a chart here that just shows our explosive growth. We have a great brand recognition. We have a great reputation. We have a great name in the community. We're really a part of the fabric of the community too, and we really pride ourselves in that. It's something we're very, very proud of. We've made the Inc. 5000 list 3 years in a row. We have all 5-star reviews on Google. I believe it's over 300 at this point. And in 2024, we were super proud of this. We won the Better Business Bureau's Torch Award for Ethics, which, look, I mean, when you're managing $120 million in assets under management, ethics is everything, right? And to do that for 20 years, ethics has to be everything. And so really, really proud to win that award this past year. And that is a great snapshot of who we are as an organization. So this is a great opportunity that we are presenting today to get in on the action with us, a company that is growing leaps and bounds, that's part of the fabric of the community, and is really just, we pride ourselves in doing business the right way all the time. All right, so we'll talk about a little bit about what makes us successful, the foundations of our success here at Trius Lending Partners. For starters, we have an all in-house team of originators and managers. Our office is based in the Towson, Maryland area. We are not an equity-based lender. That's really key, and it's unique. In this world of hard money or private lending, there's a lot of lenders that are equity-based. They'll pretty much make a loan to anybody so long as they have a good enough equity position in the property. That's not the way that we do business here at Trius Lending Partners. At Trius Lending Partners, we underwrite deals extremely thoroughly. We're not just looking at the equity of the property. We're looking at the borrower. We're running credit. We're looking at income. We're looking at assets. We are doing everything possible to keep the investor's money safe so that I can sit here 5 more years from now, 10 years from now, 30 years from now and say, since 2003, not a single investor has lost a nickel investing with Trius Lending Partners. And the day that I can't sit here and say that is the day that it's not so easy for us to raise money anymore. So that's really important to understand the difference between us and other hard money lenders. Consistency and experience. We have a very experienced, seasoned executive leadership team, underwriting team, ownership team. We know the properties that we lend in. We know how to underwrite deals. And we have a great track record in doing so. We service all of our loans in-house as well. So we're handling the collection of payments. We're handling everything A to Z. We don't outsource any of it. So we really have our finger on the pulse of all the loans that we have out in the marketplace right now, which is close to 500 loans, 500 active loans that we are currently servicing ourselves here in our Towson, Maryland office. And I mentioned our underwriting process. We have a very rigorous risk management process to our underwriting. We have an underwriting team that not only, like I said, looks at the borrower situation, the income, but is really experienced in the property. Our head underwriter, Mike, he spent 30 plus years running a plumbing and HVAC company, very successful company. He understands not only the numbers, but the real estate. And we can look at projects and better determine whether this is a project that we want to invest our investors' money in. And that's unique to us as well. And then look, we are relationship-based through and through. Most of our business comes from repeat and referral business and from our extensive broker network. People choose Trius time and time again because we're fast, we're flexible, we're reliable. We have a no BS approach to the way that we do business. We're pretty straightforward. And I think that, that resonates with not only our investors, but our borrowers alike and our team members here at Trius. Okay, so you've heard me talk now for about 10 minutes. You're probably sick of hearing me talk. I want to bring in Jessica Franta, our investor relations manager. Jessica is now going to get into the nuts and bolts. We talked about why to invest, how you can diversify. We touched on who we are as an organization. Jessica is now going to talk about how to invest with Trius. So with that, Jessica, over to you.
Thank you, Steve. Yes, as Steve mentioned, I head up investor relations for Trius Lending Partners. I think I have the best job in the company. It's an awesome job to be able to work with our investors and be a part of everybody's personal and financial stories, as it were. One quick fun fact about me, though, is that before becoming the head of investor relations, I was actually a borrower with Trius. So I am a real estate investor myself, pretty experienced. My husband and I have done, at last count, over 30 deals. We had over 20 properties, 20 property rental portfolio at one point, kind of at the height of our holdings. And it was really led and financed and enabled by Trius Lending Partners. So I've lived on both sides of the coin, as it were, the business, and I love this side of it. And really, today I get to support the investors that made essentially my journey happen. So very cool, very fun. And like Steve mentioned, he's really kind of talked about what we do and how we do it. And so really my opportunity now is to kind of talk about how you can actually invest, what that looks like. So we have two primary investment methods. The first is called direct note investing. I'll further define that here in a second. And then the second is investing into the Trius Fund One, which is a pool of loans. But first up, we'll kind of talk about note investing. We'll get to the next slide. So a lot of similarities, I apologize, between the two investment types. And every investment that an investor makes with us is based on the key foundations of everything Steve talked about: conservative underwriting the borrower and the property. So there's no differences in that. It's merely kind of which investment works better for an individual. So note investing has on average about a 10% annualized return. You receive your interest on your investment monthly. There's going to be a lot of similarities between fund and note investing. Fund investors also receive their interest monthly. But note investing, and this is, I think, one of the why it's so fantastic. It's open to both accredited and non-accredited investors. What is an accredited versus non-accredited investor? I can get into that definition if somebody's curious. But the most important part of this is that note investing is open to everyone. That's the so what. That's the takeaway. Anybody can invest with us. Anybody can be a note investor. So that's probably why it's one of my favorites. It is open to self-directed IRAs. And again, that can, that gets pretty specific. We tend to work with individuals on an individual basis to make that happen. We use third-party service providers to enable self-directed IRA or 401k rollovers, but that is a service we can provide to investors. And it really does also enable alternative asset investment for retirement plans, which is super cool. And note investing it's a tailored experience. I sometimes joke that it's a bit of matchmaking. So what happens is that when an investor wants to do a direct note investment with us, we really work with the investor to see what is the best fit. So we'll present 123 Main Street, 456, Gillis Road, whatever the properties may be. And then we really have a conversation about what you, the investor, are seeking. What is most important to you? Is it property type, property location, borrower experience? And so we really get to, from the investor relations perspective, we get to know you, the investor. We get to have a real conversation and really describe the value that we're providing, the value that this investment offers to the investor, and make sure that really the investor is really comfortable with what they're investing in, where they're putting their money, and that they understand it. That's incredibly important to us. It is a tangible investment. And yeah, as I mentioned, we can also work with 401k rollovers, but self-directed IRAs, 401ks, again, it's just a third-party service. So that's direct note investing. It's on a single property. We, the investor relations team, either myself or one of my colleagues, work with you to figure out the amount you're going to invest and what property you invest on. And then from there, we have a bit of paperwork. There's always paperwork. You never get in this world to get out of paperwork, but we get you set up. And really, quite frankly, from there, once you're invested, your money's earning interest from the day we receive it. So no hidden fees, no nothing. It's a 10% return on your funds paid monthly each month until that note is paid off by the borrower. And then typically and ideally, we get you rolled into another note and keep you invested. compare and contrast, next up, we'll talk about fund investing a little bit. So the Trius Fund 1, whereas notes are on a single property, the fund is on actually a pool of loans. So really cool, in so much as, risk, and however there is risk, as with any investment, it's spread across a pool of loans. So the investor is not looking at any specific 123 Main Street. Rather, instead, they're in the fund. It's across a pool of loans. This one, Trius Fund 1, is only open to accredited investors. Again, we can kind of get into definitions if people are curious whether or not that classifies an accredited investor. That's typically a conversation I just have on an individual level. Just candidly, about half of our investors are accredited, about half are not. So we've got a lot of folks that qualify for the fund. Some of them still elect to do direct notes, and we've got a lot of folks that are obviously in our fund as well. It has an 8 to 10% return. But there's a big kind of caveat. So $0 to $1 million for an investor, they receive an 8% annual return. 1 million to 2 million is 9% annualized return, and 2 million and above is a 10% annualized return. The big, however, is that our fund has what is called a sub-REIT structure. And again, I don't want to get too far into the weeds, and I'm always super happy to take conversations offline. But the cool part about the fund is that the sub-REIT structure allows us to have what's called a qualified business income deduction. It was the result of the 2017 Tax Cuts and Jobs Act. And so what happens for our investors is that their yield, so you might receive, if you had a $100,000 investment into the fund, you're receiving 8%. And so at the end of the year, you received $8,000 in interest. You actually don't pay taxes on the full 8% because of the QBI deduction. This year, an 8%, $100,000 return would have meant that you only pay taxes on about $6,700 of that. So it enhances the yield for our investors. It juices your return, for a lack of a better term. And it really provides a tax savings and a tax shield. And so a lot of our investors, maybe they're high income, maybe they're looking for some kind of other different type of tax benefit. Our fund has that for our investors. And so it's a really great offering. And again, it's open to self-directed IRAs, open to 401k rollovers through these third-party services, but big tax benefit. And the other difference between the fund and note investment is that our investors are also able to reinvest their monthly interest. So compounding interest, the eighth wonder of the world. I think that's a Buffett quote, I forget, but compounding interest, the eighth wonder of the world, that is something we're able to offer with the fund. Unfortunately, we cannot offer that with note investments. If you invest in a note, I'm going to force you to take your money each month. I think there's worse things in the world, but with the fund, we are able to offer either reinvestment, or again, we can just pay out monthly, and same in terms of your experience. For this purpose, also, the fund is really definitely a part of a lot of our investors' retirement strategies. It keeps them in a better tax bracket. And then, of course, that monthly payment is something that's stable and consistent and predictable. And so really provides value for our investors. So that's really kind of the quick and dirty of the two investment types. It is, above all things, investment with Trius Lending Partners is absolutely an individual journey. And so I know I probably just threw out a lot of information pretty quickly. But that being said, I'm always here and my colleagues are always here. And what we really like to do, if you're interested in investing with us, is have a personal conversation. I always joke, like, the best place to start is the beginning. And so I always want to work with an investor to see where they're at, what they need, and really then how we can best support them in their, personal and financial journey. And then we kind of go from there. So that's really the most important take, is that each one of our investors has my personal cell phone number. They use it all the time, which is good. It's perfect. And we're always here. And I think, just as Steve had mentioned, that we are a part of the community. It's very much so. There is no 1-800 number at Trius Lending Partners. There's my personal cell, and that of my colleagues. And that also, I think, is a very real value, in addition to the annualized returns, the 10% interest, but it's something we can really provide to folks. We're here and we're real and we're always ready to support. So that's pretty much, like I said, a quick and dirty on investing with us and the different investment opportunities. I haven't had a chance to see if we have any Q&A yet.
Doesn't
It
look like
does
there's any
not.
questions yet, Jess.
Yeah.
So certainly want to encourage folks, drop a question in. We're happy to stay on here for a few minutes and answer any questions that come through. While we're waiting on those questions, I just want to point out, right, people ask me all the time, I got my money in the stock market, right? You look at the average returns over the past 10 years and it's about 10%. Like, why should I invest in Trius? And I just want to touch on that, speak to that for a moment. I had a meeting this morning with somebody who asked me the exact same question. And to me, it's all about diversification, right? We're not sitting here and encouraging anybody to not be in the stock market or to completely alter the way you invest. What we're simply here to offer is an alternative solution and a means to diversify and maybe not be so allocated in the stock market, particularly in times of uncertainty. And so what this investment provides is stability, right? There's no, I call it the bathtub effect, the wave. There's no ebbs and flows in what we do. If you're at 10%, you're getting your 10% consistent, stable, reliable every single month. That does not waver, and yes, we're not Nvidia, we're not, Facebook, we're not cryptocurrency. You're not going to get those flashy, sexy returns. But what you do get is an investment that you can count on to never move. And there's a lot of value in that. So I just wanted to point that out. We do have some questions coming over right now. Let's start, Jess. I'll just sort of tee them up for you if you don't mind, and I'll
Yeah.
take whatever ones I feel appropriate for me to take. So let's start with what is the minimum investment, Jess?
Yeah. So two different answers. The minimum investment into the fund is $100,000. That's quite frankly, we have, so the fund has paperwork. We are registered with the SEC. We do all the things we're supposed to do as one should. And so that's outlined in the private placement memorandum. And then of course, the subscription agreement. And that fund, of course, is open to accredited investors. Direct notes, I have a lot more flexibility. And so honestly, I don't necessarily have a minimum. I'm super grateful because honestly, Trius Lending Partners leadership, to include Steve, they give me a lot of reign. So, I will, an example is we actually just had a new investor, a university student, is amazing, super impressive. He's 22. He started with $25,000. And I will say this, one, that is incredibly impressive and super cool. But also, our goal with our investors, Trius Lending Partners started 22 years ago. Those same investors are with us 22 years later. For 22 years, they've been receiving on average 10% return, annualized return paid out monthly. And it's an incredibly powerful part of our story. And so my goal is if we start with what you have to start with, and possibly it's just on a direct note, and that you stay with us and that I'm talking to you in 10 years. That's success. And the other thing is we grow over time. What I have found with, I've had no investors start at $40,000, $50,000. And within a year, they're at 150. And maybe part of it's just that they simply wanted to get a feel for us. They wanted to get a feel for what investing with us looks like, the process, the monthly returns, the year-end tax statements. Can I really call Jessica on her cell phone? Does she really pick up? She does. And then a year later, we're at 150,000, which is, I think the best part of our story and a really important part of one. So long answer short, I have an incredible amount of flexibility on direct note investments. I would say reach out to me. And I know there's a question about reaching out to me, but, and I work with you on an individual level. In the fund, I am at 100,000. So hopefully that answered that question.
Yeah, and you covered it, Jess, but Bob says, is there a contact information that I can use to reach out? It's right on the screen, so you can reach out to Jessica directly, or just send an email to invest@triuslending.com. And most likely Jessica will be the one to get back to you. And again, work with you to tailor an approach that works for you and your goals. Let's see.
That 202 number is actually my cell. So it's for real. So yeah, that's it. How do we go about investing with Trius?
Yeah.
If I may. So you reach out to me. I am it. So I don't work alone. I've got, and actually, one of my colleagues is in listening today as well, Gayatri. But most likely, if you reach out to the Invest at Trius or just my personal cell phone, obviously I'm going to reach out, I'm going to respond to that. But you start with us, and I love to have an initial conversation where we get to have a discussion, kind of learn about what you're looking for, what you want, what is most important. Because some folks, like I said, some folks are just like, I want the highest interest rate possible, Jess. And some folks are, hey, I'm really, really busy. I have a great job. I love what I do. I need more passive income. And those kind of conversations enable me to tailor what our approach is with you as an investor. Is the fund a better option? Is a direct note a better option? And then we're really able to go from there. But it starts with me. I'm your person, and I stay your person throughout that process. So that's the other part, is that I am always here. It's you, if you reach out to me, you're not going to get some handoff. Definitely I've got other team members, which is important in case I take a vacation, but I am always here. So that is it.
You take vacations, Jess?
No, actually, I really need one. We'll talk
She is a
after.
workhorse. I give her that. Every once in a while, she's got to go outside and tend to the goats.
I
True
do.
story.
I
True
do. I live on a
story.
farm. Yeah, I do. I live on a farm. It's like the most useless farm ever. But typically animals are getting loose. So there are very real conversations where I have to go because there's a cow in the backyard. So this is fun fact. I think
All right. Question: what percentage of your investors slash developers that receive your loans are minorities? I mean,
that's a cool
I don't know
question.
if we have an exact percentage, but look, we'll lend to anybody that is interested in lending, that meets our underwriting criteria. So, um, look,
That's a cool question. I
we'll
don't
let,
know. I spent a lot of time, if I may, Steve, I can, I
yeah.
will say this. I spent a lot of time looking at our data. So I'm more accustomed to questions like what percentage of your loans default, or what is your monthly volume coming in with new loans being issued on the street? In terms of diversity, I can just say, because I look at, and I do, I look at pretty much every single loan that comes across for a number of reasons because I'm presenting them to investors and everything. I will say this, as a woman, there was definitely, and as a borrower, I was the one that Trius underwrote, and I see a lot of women amongst our ranks, which I think is a really cool part of the story. And other aspects of diversity, I very much know they're present not only as borrowers, but also as investors. We actually have a really diverse group of borrowers and investors, in every regard. I don't know the statistics, but I do think it's a pretty cool part of our story.
Mhm.
And like Steve said, and we said it a couple times, we feel very strong ties to Baltimore, Maryland, and the greater Mid-Atlantic. And I think that's a diverse community as well. So we are very representative of that. But your question makes me want to look into it deeper. I apologize. I don't necessarily have that offhand. Yeah. Steve, I don't know if you have any.
No, I mean, look, we're committed. Jessica mentioned Baltimore. I mean, Baltimore is where Trius was founded, right? Towson, where our office is. We're 20 minutes from Baltimore City. From downtown Baltimore, we're 5 minutes from Baltimore City. And so I think part of the Trius story is the upward mobility of the Baltimore and surrounding areas, right? I mean, I drive down the streets of Baltimore and feel really good and confident that Trius has made an impact in these communities. We are funding the redevelopment of a lot of the communities in and around Baltimore. We're also doing so in the Philadelphia area, in the Camden, New Jersey area, right? Some of these areas that maybe get a bad rap. We're bullish. People ask all the time, how do you feel about lending in Baltimore City? We love Baltimore City. Love Baltimore City. Now look, like any city, has its issues and has its challenges. And are there areas of the city that we won't lend in because of property values or because of one thing? Yeah, that's part of the underwrite. That's part of keeping our investors' capital safe, secure, so that you can receive reliable returns as an investor. But Jess, no, I mean, I think your answer was spot on. But it also makes me want to dive a little bit
I
deeper.
know, I know. Yeah, don't threaten me with a good data pull. Steve's like, oh boy. We got an awesome question in the chat. A recent graduate, and how much should I have saved to invest in mortgage notes? One, congratulations, that is super
Yeah.
awesome. I get really, really excited, especially being a part of folks who are really starting out with their investment. I was saying to my colleague Gayatri that she works in investor relations with me. We call it the 2 decade difference because I'm about 2 decades older than she is, which we won't talk about further on this webinar. But, I have a lot of peers who have done incredibly well and have done everything right. And what I mean by that is they invest in their 401ks, they invest in their IRAs. And now they are looking, maybe they want to step back from a corporate career, they want to do a pivot, they want to do something different. And they're literally stuck simply because their money is tied up in retirement accounts that they can't access cash flow from it. And so these are, this is a more nuanced conversation. Like I said, so much from an investor relations perspective, so much of what I do is so tailored and so personal. That's why I, love talking to people so I can figure out how I can help. But the short answer is if you're young, chances are you're going to have an opportunity to have that 401k, have that IRA, and it's something we always know we're a part of your investment strategy. We always assume we're not the whole part of it, and that's totally good and that's totally okay. But to be part of it would be fantastic, and I get super excited. So honestly, my answer to that is you call me and we'll start with what you've got because I just think it's fantastic. And again, congratulations. And
I think
notes
what we
really allow
hear,
us. Yeah.
sorry, I
Sorry.
didn't mean to cut you off, Jess. I think, what we hear a lot from our borrowers in particular is, gosh, I wish I invested in real estate earlier. I wish I invested in real estate in my 20s, in my 30s. I wish I bought more properties, or I wished I invested more money in some means of real estate. Most people think of real estate, and I think they think investing in tangible properties, right? Fixing and flipping a property, or fixing to hold and rent a property. This is a different and very unique opportunity, right? That's a tough game. Investing in real estate. She knows better than anybody how difficult that game is of acquiring properties, being a landlord, dealing with the 3 a.m. leaky toilet phone calls.
Mhm.
With this opportunity, it's passive. You park your money and you go and you keep doing what made you that money in the first place. And we take care of everything else. We make the loans, we underwrite the loans, we keep your money safe. You get your safe, steady, and reliable return. So it's a different way to invest in real estate. I agree with Jess completely. The earlier, the better. And if you have the means to get into the fund or grow into the fund, that magic of compounding interest is really where it's at.
Awesome. But yeah, reach out to me. And again, congratulations. And I would love to talk to you. So
Yeah.
yeah.
Any other questions on the first day of spring here, 2025? Anything else? If not, Jessica, our contact information and
Yep.
Jessica's contact information is on the screen. Again, you can always send an email to invest@triuslending.com. That number on there, the 202-510-3337, that is Jess's cell phone number. She actually does pick up at all hours of the day and night, although I encourage her not to as often as she does. She does, and she'll take your call. And we're happy to have a conversation. I'm happy to have a conversation with anybody, anytime. So much of what I do is to get out in the community and meet for coffee and meet for lunch and just connect with people and understand where they're at, where we're at, how we can help, whether we can help on the lending side or the investment side. Trius is here to be a partner however we can. It doesn't appear that we have any more questions. So, Jess, any closing remarks?
No, just thank you all again for taking the time, to be here today. We really appreciate it. I know everybody's busy. We're always here and here today. We'll be here tomorrow, here next week. So hopefully I will be able to talk to some of you in the near future.
Absolutely.
Yeah.
All right. With that, thank you, everybody. Have a great rest of the day. We'll see you soon.
Thanks.